Hello and welcome. This is BloombergQuint Stocks to Watch, in which we take three stocks which are in the news and take them up with our experts. Well, today we have with us Mayuresh Joshi, Head of Equity Research India at William O'Neill India. Mayuresh, good morning and thanks for joining. Well, the three stocks that we are addressing today is Asian Paints, HDFC AMC, and Info Edge. And very quickly, I get on with the first one. Well, we have Asian Paints and it's announcing its earnings today. Of course, we're expecting a muted quarter given the lockdown which came into place in the last couple of weeks of March. But I reckon a lot will have also been factored in with respect to, well, April, May, and possibly half of June when it comes to the first quarter. And so to take us through that, Mayuresh, welcome. How are you seeing Asian Paints at this point in time? How are you playing the paint sector?
Morning, Agam. No, so for the paints as a sector, obviously it's going to witness short-term pressure, both because of the lockdown situation that we had witnessed, and because of that, the supply chains would have got disrupted significantly. Add to that the short-term pressure on the demand side as well. So that's going to cause a significant impact as far as Q4 numbers are concerned, and even a larger significant impact in Q1. So the factories have started reopening ever since unlock phase 1 has got announced, and to that extent, the utilization levels across their plants would start ramping up. Again, I think from a structural perspective, the long-term drivers obviously stay intact. So the volume growth is largely dependent on how the GDP of the country will grow. And if it is expected to contract this year, I think this year might be a washout year, specifically the next two quarters, as far as the volume outlook is concerned. But they have a strong dealer network. The expectations in terms of repainting demand and the expectations of GDP bouncing back very, very sharply in FY21. I think those are key trigger points from a long-term perspective. So there is short-term pain that one has to probably go through over the next couple of quarters, to say the least. But the long-term structural stories remain intact. The second element, obviously, is the cost of labor is far more significant than the cost of paints, because a lot of companies, including Asian Paints, have introduced a lot of innovation, specifically in terms of paints, in the economy range as well. And tier 3, tier 4 cities is where demand remains extremely robust, specifically as volumes will pick up going forward as well. The dealer inventory around a month's or at this point of time, and therefore the pain has to get gestated in terms of reported numbers. As far as Asian Paints is concerned, obviously decorative leader with 85, more than 85% coming in from the Indian markets itself. So the expectations is largely, again, on an annualized basis over the next couple of years, margins should be around a reasonable level, around 20-21 odd percent. Return on equity has always been strong because of the cash flows. But the inherent pain will come through in this quarter and the next. So I think let's wait for numbers. And the expectation, as you rightly said, is it's going to be a little bit soft.
Okay. Well, from there on, we move on and talk about HDFC AMC. Now, remember, we had an offer for sale from its promoter, Standard Life Investments, and now it is well within the minimum public shareholding norms as mandated by SEBI, and the promoters now holds only 74% stake in HDFC AMC. Mayuresh, that supply overhang is out of the way now. How do you rate HDFC AMC at this point, well, as an investment?
So two aspects again, Agam. If you look at the entire AUM scenario, specifically for the quarter gone by, and with the volatility that we witnessed around the end of March, it was a natural phenomena that there were outflows across schemes. So debt, equity, liquid schemes saw a huge outflow. However, SIP flows have remained very, very consistent even through the crisis period. Now, for HDFC AMC individually, I think the leadership position with a market share between 14 to 15% still continues. Outside the urban cities, B30 or the emerging new cities, which account for a major chunk in terms of the new SIP or the AUM growth for all these asset management players, there it has got around 12% in terms of market share. SBI obviously is the market leader at this point of time with a share of almost 20-21 odd percent. A large element in terms of their AUM at this point of time 310,000 odd crores, a large skew towards equity, and the yield thereof remaining extremely strong. I think that is something which has given HDFC AMC premium valuations. So market share gains, expectations of higher proportion of equity EMs, the presence in B30 cities, as I said, has always given that edge in terms of the return. The return ratios that are expected out of those stocks, and rightfully so. ROEs have been around 26, 27 odd percent. Revenue to AUM is expected to remain consistent at 0.5%. However, the overhang that has got removed, I think there can be another issues that can come through in terms of whether these valuations can trade at a premium. For example, I think UTI AMC, as I just read, has received the nod in terms of a SEBI approval process. And there might be other asset management companies that can also come through over the next few months or quarters as time permits. Therefore, I think the expectations in terms of more AMCs coming through in the markets and whether these premium valuations hold good because of further players coming in and choice given to investors, one really has to wait and watch. It's a solid franchise, no two ways about it. But again, all these other factors will also be at play as far as the asset management business is concerned.
Okay, fair enough. Well, and we address a final stock on our list, and that's InfoEdge. Well, it came up with earnings last evening, and based on that, it wasn't out of expectations, considering its revenues rose around 7.8%. Margins holding steady at 28% against 28.4%. Net profit did decline by as much as 64%, but that was largely on account of certain associates and joint ventures, which led to an operating loss. And because of that, there was a loss of around 136 crores from associates and JVs as against 90 crore profit for the same quarter in the last year, which is why we saw that dip in profitability. Mayuresh, the management has always maintained that this is one company which is linked to the well-being of the economy. And based on that, we're still seeing InfoEdge trade at very, very high valuations. How are you rating this one?
The numbers, as you rightly pointed out, were more or less on expected lines. Now, the core elements of their business, specifically the recruitment business, which happens to Naukri, and the real estate arm, which happens to 99 acres, the management did allude to some pain going forward, both in terms of the receivables as well as expectations in terms of delay in collections that they might face. So, considering both these elements at play, both these parts of the businesses are going to get affected because of the lockdown that you witnessed in Q1. So the Q1 earnings have been pointed out are going to be extremely soft, which means that the annualized numbers will also take a hit. Now, apart from these two core businesses, the investments that they've done in various investee companies, the kind of impairments that they are taking over the last few quarters, I think that is also going to take a toll in terms of the overall profitability. Cash flows have always remained strong for this company because of their core business, Naukri, which has been a cash cow for the company. But how does the recruitment scenario play out, specifically post this pandemic or even during this pandemic crisis, is something to be seen, and how companies probably react in terms of new hiring. The fourth element, obviously, is also the investments that they've got in companies like Zomato or even Policy Bazaar, which obviously are fetching multi-dollar valuations at this point of time. And considering their stake within these companies as well, I think the sum of value parts that get added to the final price, which gets traded, has already got gestated into it has got gestated into from a numbers perspective. Therefore, I think it's all about how numbers will play out. Numbers can be very, very volatile considering the kind of businesses they are into. Because even the reality business on 99 acres, I think what kind of traction does that business generate going forward, specifically in a periodicity like this? And when does the recovery finally come? I think that probably remains an overhang onto the stock as well.
Okay, fair enough, Mayuresh. We'll leave it at that. Thank you so much for joining us and taking us through your views on these stocks this morning. Well, on that note, it's a wrap on stocks to watch, but there's lots more lined up. Stay tuned to BloombergQuint.